The one big beautiful bill made some major changes to charitable contributions and gambling losses. There's going to be some winners and some losers here. So let's take a deep dive into what it means. I'm Mike Mellace with Pink Harbor CPA. We're a CPA firm that serves people all across the country for tax preparation, tax resolution, or accounting and advisory services. Let's start and take a look at a dive into charitable contributions. In the past, under the old rule, charitable contributions were always taken on Schedule A, the itemized deduction page. If you did not have enough money to itemize and you instead took the standard deduction, then you would not get a deduction for the charitable contributions that you made. However, under the new rule, there is a now above the line deduction. So on page 1 of your return, before determining adjusted gross income, you are going to be able to deduct $1,000 if you're single for charitable contributions made by cash or not cash contributions, or $2,000 if you are married made by cash contributions. Now, this does not affect non-cash contributions. This is going to greatly benefit people who take the standard deduction and who do not itemize their return, because now they will get a deduction for at least $1,000 if they're single, or $2,000 if they're married and make cash contributions. This will not benefit people who typically itemize and typically claim charitable contributions. I'm going to tell you why. Those who normally itemize their deductions and take the charitable contributions, you are already used to getting a 100% deduction for the charitable contributions that you make. Here's a caveat. Section 70425 of the Big Beautiful Bill limits down your charitable contributions by instituting what a floor. So what a floor means is we need to come above the floor before we can write off $1. The floor is 1/2 of 1%. So you need to come above 1/2 of 1% on Schedule A to take those charitable contribution deductions. And that pertains to cash and non-cash contributions. Again, non-cash will always go on Schedule A under the old rules, and the new rules, it's the cash contributions that can go to page 1 before you hit adjusted gross income. Now, for businesses now have a 1% form. By businesses, I mean corporations. They have a 1% floor they need to overcome. So this will benefit people who normally do itemize. They will still get a charitable contribution, but it will injure people who typically do itemize and take that charitable deduction on Schedule A. Now, brand new rules regarding gambling and gambling losses. In the past, you were able to deduct 100% of your gambling losses on Schedule A as they related to gambling winnings. So in the past, we would put, if we won $30,000 at the casino and we lost $30,000, we would put on page 1 $30,000. And on Schedule A, we would take a gambling loss of $30,000. So the two netted each other out. Still a benefit to the government, because what it did is it raised your adjusted gross income, which gives things like how much you could write off now for charitable contributions, or how much you could write off for medical expenses. So it just still did favor the government, but didn't hurt you that much. Now, under the new rule, you can only take gambling losses to 90% of gambling winnings. What this does in effect is it creates phantom income. So we had a $30,000 of gambling winnings. Now, instead of taking that whole $30,000, because we have to take 10% off, we can only write off $27,000 of our losses. So the $30,000 in winnings minus the $27,000 in losses that we can write off creates $3,000 of what we call phantom income. So income that's not there, but we're going to get taxed on it anyway. We also already do have phantom income. If you typically take the standard deduction, you haven't made enough to itemize. You could have phantom income in the difference that just takes you to get from that standard to the itemizing. We're not going to get a benefit for anyway in gambling losses. We're already used to that. Now, I will say that there is a proposal in Congress right now. It's led by Nevada lawmakers, and it says that they want to repeal this and give back the full deduction. And this is called the Fair Bet Act. Has not passed the House yet, has not went to the Senate yet. The Senate doesn't have anything that they're creating right now, but there is proposed by Nevada lawmakers to restore this back to 100%, and it does appear to have support by both Republicans and Democrats. How did this 90% of gambling winnings rule come in? Well, this was a last-minute proposal in the Senate. Last-minute amendment in the Senate to get someone's vote. They put this in there to get this vote over the top. Now it looks like what they're doing is after this vote is passed, they're saying, no, we want to repeal this amendment, and the only way to repeal that amendment is to create a new bill. So it has bipartisan support by both Republicans and Democrats. It will go to the president's desk when this does get introduced and gets passed by both houses. Most likely go, it's the Fair Bet Act. Whether Donald Trump will sign it into law or not, I do not know, because it will then increase the deficit already higher than we have. So we'll have to see what happens with this. Now, a positive thing for gamblers is that there was a special rule created. So under section 70114, subsection 2, paragraph 1, they created a special rule that codifies in the law that says, in addition to the losses that you had while you were physically at the casino, other things that get added in to those gambling losses includes your travel back and forth. So if you drove, you take the standard mileage rate plus your tolls. If you take a plane, you take your plane fare plus the mileage and the tolls getting to the airport. If you stayed overnight, it's going to take your lodging. And if you eat while you're there for the convenience that you can continue to gamble, it's most likely going to take your meals too as well. The reason why this needed to be codified is because the IRS would take varying interpretations to see if your travel, your lodging, and your meals would be deductible or not. Typically, what the IRS auditors would do is they would say, if you're a professional gambler, we will allow them. But if you're a casual gambler that goes to the casino once in a while, we're not going to allow that deduction for casual gamblers. It wasn't set in stone. The IRS auditor could apply it depending upon how much you won or how frequently you went, even if you were a casual gambler. But now what Congress and the Senate has done is they codified this in the law to make the law equal for everyone, that your travel, your lodging, and your meals while you're physically gambling and your drinks while you're physically gambling will be a deduction. So that part is a bit of a win, but still, no matter what, you're limited to 90% of your gambling winnings. You're stuck there. So unless this Fair Bet Act gets passed, this is where we are. Now, this gambling rule change goes into effect January 1, 2026. So there is a lot of time for this to go into effect. It will be interesting to see if this law, if this new proposal from Congress gets voted on prior to the midterm elections or not. And why do I say that? This could become a midterm election issue. Nevada is a swing state. So a lot of Nevadians, they gamble, right? And a lot of people in Nevada are dependent upon tourism income to come in there. So I could see this becoming an election issue if it's not voted on quickly, right? So whether or not this happens earlier or later during the course of the year, I do fully expect the 90% to be restored to 100% of gambling losses. But the timing is what we don't know. But as of right now, the rule of the land is that starting January 1, 2026, you are going to be limited to only taking 90% of your gambling losses. My name's Mike Mellace. I'm with Pink Harbor CPA. If I can help you out in any way with your tax preparation, tax resolution, or your business accounting and advisory services, please give me a call at 856-226-9524 or check me out on the web at pinkharbor.com.